If you're a high income earner that supports meaningful causes and creates long-term legacies with charitable giving, you need to listen up. Because starting January 1st of 2026, the landscape changes, and anyone looking to maximize their deductions needs to understand how the new rules work. I'm Jared Kinney, Wealth Advisor at the Noble Group. I'm going to walk you through exactly what's happening, what it means for you, and the 3 most effective strategies you can use before the end of 2025 to keep your charitable dollars working as efficiently as possible. Starting January 1st, the One Big Beautiful Bill Act introduces 2 major changes to charitable deductions, a floor and a ceiling. Let's talk about the floor first. Under the new rules, charitable gifts below 0.5% of your adjusted gross income will no longer be deductible. So if your AGI is $1 million, your first $5,000 of charitable gifts won't generate any deduction, nothing. Only amounts above that 0.5% threshold will count. For many high income earners who give sporadically or in smaller increments, this could wipe out a portion of deductions you've always counted on. Now let's talk about the ceiling. Today, if you're in the top income bracket, your charitable deduction reduces your taxable income at your marginal rate, which is currently 37%. In 2026, however, that benefit drops to 35%. That may not sound like much at first, but look at the numbers. If you donate $10,000 in 2025, you get a $3,700 tax benefit. Make that same gift in 2026 and that benefit falls to $3,500. That's a 5.4% reduction. And as your gifts get larger, that gap grows quickly. Also note that these changes don't just affect individuals. Corporate charitable giving will also face a new floor of 1% of net income, although their 10% ceiling stays where it is. The bottom line is simple. Charitable giving is about to become less tax efficient starting in 2026, but you can still lock in today's benefits if you act before the end of 2025. At the end of the video, I'll show you how to get a free video review from us highlighting our recommendations for your charitable giving situation, so stay till the end to learn more. One important piece that's still available this year and next is the ability to use charitable carryforwards. This lets you carry excess charitable deductions beyond the AGI limits for up to 5 years. Carry-forward deductions taken before 2026 remain under the old, more favorable rules. Once the new year hits, however, carry-forwards become subject to the new floor and ceiling. So if you're planning a large gift or series of gifts, 2025 may be the last year to front-load your strategy and get full deductibility before the rules tighten. Now that we've covered what's changing, let's focus on the most tax-efficient giving strategies you can use today. Strategy number 1. Giving appreciated securities instead of cash. If you hold highly appreciated stock or ETFs, this is one of the most powerful tools available. Giving appreciated securities allows you to deduct the full fair market value of the asset at the time of the gift, up to 30% of your adjusted gross income when given to public charities. It also allows you to avoid capital gains tax on the appreciation entirely. So imagine you bought a stock for $20,000 and now it's worth $50,000. If you donate the shares instead of selling them, you avoid paying capital gains on the $30,000 gain and you still deduct the full $50,000. That's a double benefit and it's available in full through December 31st. Strategy number 2, use a donor-advised fund. Donor-advised funds are one of my favorite tools for clients who want flexibility. Here's how it works. You make a contribution to the donor-advised fund in the year that makes the most sense tax-wise, in this case, 2025, and take the full deduction in that year. Then you can recommend grants to charities whenever you want in the future. After giving to a donor-advised fund, you get a deduction today, investment growth potential inside the donor-advised fund, flexibility to support charities over time, and a much simpler alternative to a private foundation. And remember our first strategy of giving appreciated securities? You can give appreciated securities to the donor-advised fund as well. Using the same previous example, if you gifted $50,000 to the donor-advised fund with appreciated securities, you would receive a $50,000 deduction today, plus you could liquidate the securities and diversify without incurring capital gains tax, a double tax savings. If you're considering bunching deductions or making a larger gift before the rules change, a donor-advised fund can be a perfect vehicle. Our final strategy, charitable remainder trusts. A charitable remainder trust is ideal for clients who want to give generously and retain income during their lifetime. Here's the basic idea. You transfer assets into the trust. You receive an income stream for life or for a set term. Then, at the end of that period, whatever remains goes to charity. The big advantage? If you use a CRT before 2026, all the current deduction rules apply, including the ability to defer capital gains taxes inside the trust. There are two main types of charitable remainder trusts. One pays a fixed income for the set term, while the other pays interest or dividends the trust makes each year. There are pros and considerations to each, so make sure you discuss this with your advisors before implementing. For someone with highly appreciated assets such as real estate, concentrated stock, or business interests, a CRT can solve multiple problems at once, including income, tax efficiency, and charitable impact. The spirit of giving isn't changing, but the tax rules around it are. For high-income earners, the difference can be meaningful. By getting in some last-minute planning, you can make sure your dollars have maximum impact both for the causes you care about and for your long-term financial plan. Time is running out, so you need to build your strategy now. Click the link in the description or scan the QR code to start your free review process with us. Our short survey asks you questions about your unique financial situation so we can record a custom video with personalized recommendations for your charitable giving situation. Let's make sure your generosity goes as far as possible for you and for the people and causes you care about. Thanks for watching, and we'll see you in the next video.